Ark Invest's Sam Korus explained why Ark Invest now feels more confident about Tesla stock going forward after the Investor Day. A huge shout out to Farzad for hosting this panel.
Analyst for Ark Invest, Sam Korus.
Yeah, I think the Tesla community is great at educating everyone. So keep tweeting, keep doing the podcast. Like that's terrific for all investors.
Good.
And I think what's kind of interesting is Tesla is incredibly good at telling you exactly what they're going to do. It's just what they tell you they're going to do sounds crazy if you come in with preconceived notions. And so I think a lot of times what happens is they'll come out and they'll say what they're going to do, and then people just don't listen because, as Pierre was saying, maybe it doesn't fit into their box or their, preconceived notion of what is possible, and then they go ahead and they do it.
Remember when Bill Gates said that electric semis probably will never happen? And what was his reasoning? He must have a good reason, right? He's really smart, supposedly. The problem is that batteries are big and heavy. Okay, the more weight you're trying to move, the more batteries you need to power the vehicle. But the more batteries you use, the more weight you add and the more power you need. Even with big breakthroughs in battery technology, electric vehicles will probably never be a practical solution for things like 18-wheelers. And because Bill Gates is a smart man, he must have said it maybe in like 2005 or 2004. There's no way he said that in 2020. Whoops. It was August of 2020 when he said that. And we now have a Tesla Semi driving 500 miles fully loaded on a single charge. That's without any major battery improvements. Imagine with better batteries, how much further these semis will be able to go without charging. And here's one actually being used.
And that's that. And then the next thing comes and they say what they're going to do. And then everyone says, no, that's not possible. And then they go ahead and they continue to execute on that.
Cybertruck is next. You know it. I know it. Although it may be delayed a little bit. I don't expect many deliveries this year, but next year I would expect a significant number of Cybertrucks to be delivered. It looks so cool. Look at these lights.
And so I think we're kind of at this next point in that phase where, they came out originally, right? You go back. No one said they were going to be able to scale Model 3, right? And, just yesterday, someone from Toyota tears down the car and they say, wow, this is pretty good manufacturing.
Specifically, Toyota said it's a work of art, all while Tesla at Investor Day was dissing its own old manufacturing techniques for the Model Y.
That's very different from saying, what are you going to do when Toyota starts to manufacture an EV? And now we're at this next phase of growth here where they're looking for this next generation platform. They come out and they say, here's a permanent magnet motor with no rare earth metals. It's going to cost $1,000, right? So they say that. And it's like, that alone, maybe that doesn't mean anything, but then you go ahead and you do the math and you say 75 kilowatt hour battery pack with a $1,000 motor that's efficient enough to use, iron phosphate cells so you can keep cutting those costs. And then all of a sudden you have a drivetrain that's, $6,000-ish dollars and 25% of the cost of the car. That's like a rough rule of thumb for how you get to the drivetrain. And all of a sudden, you're at a $25,000 vehicle. And Pierre put out slides on this breakdown in more detail, but it's like they've laid it out in very simple steps. And so it's a question of, do you believe that they can execute on this, or do you think that they're making it up? And I think it's pretty clear that they've been executing on what they've said they'll do.
Here are the exact numbers that Sam is using: a 75 kilowatt battery multiplied by $70 per kilowatt hour. And by the way, in the US, Tesla is going to get huge subsidies for batteries. So this is relatively conservative if we sell the vehicles in the US. And then $1,000 for the powertrain. That makes a total cost of $6,250, and that's how you get a $25,000 vehicle. Some will say, oh, but how about the range? Wouldn't that be a really small battery? Actually, no. You look at the Model Y, and it has batteries that range between 75 to 81, and that gives a maximum range of about 330 miles for the Model Y. And this next generation vehicle is probably going to be smaller and lighter, meaning you don't need that big of a battery pack to go that far.
The development of FSD is going to determine a lot of the outlook, right? They asked today, how many models do you need? And if they can achieve full self-driving as we think they can, as Elon thinks they can, then I think that really changes the outlook of what type of vehicles you create. Because if you have an autonomous vehicle, then all of a sudden, who cares compact, who cares sedan, who cares SUV? It's like you're going to optimize to the robo-taxi form factor, which is going to be, I think, different than everything we have today. And I think autonomous itself and the work from Tasha Keeney,
who is the Director of Investment Analysis and Institutional Strategies at Ark Invest,
suggests that autonomous should lead to a lot of form factor diversification as well. So I think that development alongside the traditional electric vehicle path is going to determine, what the next 5 years look like.
A year ago, Ark Invest believed that based on their simulations, full self-driving is going to be solved by 2028, and most likely in the year of 2024. I think sometime before the end of 2030. Solving autonomy fully will change the vehicle design significantly and also how these vehicles will be produced. So it does make sense that Tesla has strategies for each scenario. One where Tesla indeed does solve full self-driving rather quickly, and another one where there are delays.
After today's presentation, are you more confident, less confident, or right about where you were about your trajectory for Tesla's future and its valuation?
So I'd say more confident. I think that, again, I'll say, Tesla's been telegraphing what they're doing for a long time. And I think they've gone into more detail and kind of shed some light on what's going to happen. And I think all of that detail leads to some more comfort and confidence in their trajectory.
And that is a huge statement because Ark Invest's price target for Tesla stock split adjusted is about $1,500 for 2026 before 2026 ends. Being more confident that Tesla will be able to execute and keep making progress, that is quite bullish, I think.
And then the other thing that they highlighted is just from the strategic angle of being able to pretty much not be afraid of having too many battery cells, right? So if you're just a EV maker, you want to match your cell supply to the vehicles you're making, because if you have too many, then that just goes into inventory. If you have an energy business, then any spillover can go into the stationary energy storage business. And they highlighted that, at the right price point for a utility, there's a huge amount of existing demand out there. These batteries can replace peaker plants. And so there's this sitting demand waiting to be fulfilled. So if you have that spillover, you can go right there.
Yep, Sam was actually listening. Take a look.
Cell supply, to have that exceed what is needed in vehicles. Because if it goes below what's needed in vehicles, then with the factories stall. But then what do you do with all these extra cells? The much easier thing to scale up and down is Powerwall and Megapack output, stationary storage. We can then overcapacitize in cells and packs and scale production of stationary storage, which is much easier to scale than vehicle production. Quasi-infinite demand for that, really. Many terawatt hours. And we got a long way to go to get to many terawatt hours per year.
You know that Lathrop factory that Tesla is building in California that a lot of Tesla bulls are raving about? That one has a capacity to produce 40 gigawatt hours per year. It would take 25 of these factories to produce 1 terawatt hour per year. And Tesla said that at that factory, Tesla would be able to produce about 10,000 megapacks per year. If you multiply that by $2 million per megapack, you get $20 billion in revenue. And last year, Tesla had $81 billion of revenue. Tesla can still build 25 of these factories and still have more demand for these megapacks. The megapacks are overlooked. But Tesla will not really scale them as long as there's a whole lot more demand for the EVs. The EVs are the priority. This was awesome to hear from Sam, and this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.